In the fall of 2023, Matthew Sluka of the College of the Holy Cross was unstoppable. The quarterback torched Patriot League rival Lafayette, rushing for 330 yards and setting the single-game NCAA Division I record for rushing yards by a quarterback. If someone came from the future and gave you that stat line, what would your DraftKings activity have looked like? Predicting the future is hard. The Crusaders lost. Systems are more chaotic than we'd like to admit. Sometimes knowing what will happen isn't enough to be sure about what will happen.
Be a left right at a party.
I'm pretty fun at party.
About 10 years ago, a group of hackers broke into the SEC's Edgar database. Sometimes companies will send test filings through the system to make sure everything looks good in quarterly and annual reports. Whenever this happened while the hackers had access, they'd be able to see information before the public. They would be the only people in the world outside of the company who knew the upcoming earnings numbers. Then the hackers would distribute the data to a network of traders in exchange for a percentage of whatever those people could make from the inside information. You know the revenue, you know the earnings per share, you know the analysts' expectations. What do you think was the rate of success achieved by the traders? What do you think would be your rate? The traders were profitable on 77% of their trades, a huge increase from their underwhelming 45% for trades that they put on when they didn't have any information, but still wrong almost a quarter of the time. The point remains, predicting the future is hard. If you subscribe to this channel, and if you don't, you should, maybe you're also familiar with a spectacular YouTube video called Peter Schiff Was Right. It features dozens of clips of Schiff on financial news networks in the lead up to the great financial crisis, describing pretty much exactly what is about to happen. Here's a favorite.
Most of the profits that people have in real estate are going to vanish, just like the profits in the dot-coms in 1999-2000. It's a fantasy. People can't sell their house. The inventories are exploding all over the country. Houses are on the market for 6 months a year. There's no bidders. The prices are going to fall through the floor. You guys are deluding yourself.
We all know the ending. It's right there in the title of the video. Schiff was right. 2008 is when the people who were laughing found out. Americans couldn't pay their mortgages, Lehman collapsed, the entire financial system seized up. The NASDAQ lost over 40%, S&P 500 about 37%, and if you had instead allowed Peter Schiff to manage your money, you would have lost even more. He wasn't one of the main characters in The Big Short for a reason. How could things have possibly gone so wrong? The housing market was going to collapse.
See their home equity vanish, and it's not limited to mortgage credit.
Michael Burry and Steve Eisman saw this and shorted the housing market. Peter Schiff saw this and fell victim to what's known as the law of the instrument. If all you have is a hammer, everything looks like a nail. Schiff's Euro-Pacific capital had done well in the years preceding the crisis by investing in foreign equities and commodities. His reason being that he thought the US dollar was ripe for devaluation. In 2007, Schiff published a book called Crash Proof: How to Profit from the Coming Economic Collapse, recommending basically the same strategy. So then maybe it should not have been surprising when in 2008, that's exactly how he was positioned.
The party is over for the United States. We cannot continue borrowing to live beyond our means.
After the fact, he told interviewers that he had assumed the international businesses would decouple from the US as everything collapsed here. People would seek safety in things like gold and the dollar would plummet. He ignored old axioms like, when America sneezes, the world catches a cold. And in a crash, all correlations go to 1, meaning that even if commodities would hold up in theory, when everyone is selling everything they can, that means they're selling hard assets as well. His investors ended up losing over 50% for the most part in 2008. The Wall Street Journal quotes one of them saying, "His thesis of how things are going to collapse and crumble and fall apart isn't effectively executed in my account." Another one is quoted saying, "He was right about one thing and wrong about everything else." The mirror image of Schiff is Cathie Wood. In 2018, in the wake of Elon Musk's infamous 420 funding secured tweet, she penned an open letter to the Tesla head. She did not want him to sell.
Well, we said that by going private, he would deprive Tesla of reaching his own priorities: mobility as a service, autonomous truck platoons, utility energy storage, even air passenger drones.
Noting that in 5 years' time, if the bull case played out, shares could increase by more than 10 times. At that point, shares were trading close to $20 on a split-adjusted basis. 5 years later, they were in the mid-200s, an incredible prescient call that made Wood famous and wealthy. Of course, there's also the matter of what she said Tesla's financial metrics would look like in 5 years that would substantiate that valuation. The reason she believed Tesla shares would increase by 1,000%.
It's really premised on it becoming an entirely different business from what we watch right now, right?
Were that by August of 2023, Tesla would be selling 1.6 million cars per year with a gross margin of 30%. Tesla's trailing 12-month sales as of August 2023 were about where they should have been, but the margin wasn't even close, and it's still falling today. Then again, a lot of the value wasn't even supposed to be from cars at that point. Wood's bull case justification included over 4 million robotaxis, each driving about 100,000 miles per year and netting $36 billion in profit for the company. Tesla followers will note that there were 0 robotaxis in 2023 and in 2024, and we're halfway through 2025 and there's only a couple of cars in a single section of a single city that still have an employee weirdly sitting in the passenger seat with you. Like Schiff, she was right about one thing and wrong about everything else, but in her case, she was right about the one thing that matters most. So, who's the better investor? Well, the game is long. Schiff's precious gold has been on a tear recently, but his instrument obsession kept him out of Bitcoin when it should have been directly in his wheelhouse. Cathie Wood bought basically every hot tech stock, and then, when the chance finally arrived to duplicate her success with Tesla via Nvidia, she ended up selling the majority of a position by early 2023, missing what is at least at 8x. The flagship ARK fund is still down on a 5-year basis. Maybe we should be asking who's less worse. Or maybe running a fund is more about having a brand than even having a result. In 2024, Matthew Sluka transferred to Nevada, having graduated from Holy Cross, stepping up from the FCS to the highest echelon of Division I. Defenses ate him alive. Through 3 games, before leaving to a bizarre financial dispute, Sluka barely completed 40% of his passes. And you know what happened, right? In that span, the team went 3-0, including a win over a top-ranked team. Sometimes, the journey is disconnected from the destination. Thanks for watching, guys.